Today, Grayscale and the SEC head to court over a Bitcoin ETF. The SEC also faces pushback from a judge in Voyager's bankruptcy proceedings. And Morgan McKenney of Provenance Blockchain Foundation reveals how TradFi could embrace blockchain technology. Welcome to CNBC's Crypto World. I'm McKenzie Sigalos. Interest rates are back in focus for crypto prices this morning, as the chairman of the Federal Reserve testifies on Capitol Hill. Chair Powell told lawmakers that interest rates are likely to be higher than first anticipated, which is, of course, bad news for risky assets like crypto. By noon Eastern, Bitcoin and Ether both fell around 0.6%, and Cardano dropped 1.5%. Okay, let's talk about the top stories. First, Grayscale and the SEC are heading to court today over the investment firm's Bitcoin spot ETF. The SEC has denied several spot ETF proposals in recent years, but Grayscale is suing the agency over the offering, and oral arguments begin today. Now, Grayscale contends that the SEC has already allowed Bitcoin ETFs in other forms, like ProShares Bitcoin Strategy ETF, which tracks futures. The SEC, meanwhile, argues that Bitcoin futures are regulated, while spot trading is not, meaning that it could be susceptible to fraud. During today's hearing, the panel of appeals court judges seemed somewhat skeptical over the SEC's argument, with Judge Naomi Rao calling for the agency to further explain why it thinks Bitcoin futures and spot trading are in fact different. This suit is happening right as we're deep in a crypto bear market, but also as Grayscale's Bitcoin Trust trades at a steep discount. Investors have been waiting for a way to redeem their holdings, and Grayscale has pitched converting the trust into a spot ETF as one solution. Okay, sticking with the SEC, the regulator is also facing doubts from the judge overseeing Voyager's bankruptcy proceedings. The court is weighing a restructuring proposal that would let Voyager create a cryptocurrency to repay customers and sell itself to Binance US for around $1 billion. As part of that proposal, executives and advisors for the company would be protected from legal actions brought on by enacting a bankruptcy plan. Well, the SEC argues the protections are too broad and that Voyager would be issuing an unregistered security with this new token. On the other hand, Bloomberg reports the judge won't allow the regulator to punish executives for the plan. Judge Michael Wiles reportedly told the SEC that its position would, quote, leave a sword hanging over the head of anybody who's going to do this transaction, and would make it hard for bankruptcy proceedings to continue. Voyager customers recently voted in favor of the restructuring plan by more than 90%. Last up, the SEC also filed emergency action against Miami-based investment advisor BK Coin. In a press release, the agency accused BK Coin and its principal, Kevin King, of orchestrating a $100 million Ponzi-like crypto fraud. The SEC says the firm raised that money from at least 55 investors between October 2018 and September 2022 and promised to invest that money in crypto. Instead, the SEC claims BK Coin used $3.6 million of that $100 million to make Ponzi-like payments, while King took at least $371,000 to pay for vacations, sporting events, and an apartment. We reached out to King for comment, but haven't heard back yet. All right, on to our main story. The crypto meltdown and regulatory whirlwind in the U.S. has not stopped companies from researching and implementing blockchain technology. Crypto World's Jordan Smith spoke with Morgan McKenney, the CEO of Provenance Blockchain Foundation, to discuss how financial services companies in particular are implementing this tech.
So Provenance is focused on letting financial services and fintech companies access blockchain technology. Can you talk about how that trend has evolved in recent years, especially as crypto and blockchain has become so mainstream with so many people talking about it? What has that evolution looked like?
Thanks, Jordan. And I think 2022 was the first year that large financial institutions adopted blockchain in their core business use cases. Think of a Bank of New York Mellon that touches 20% of the world's investable assets and is a safeguarder of trust and safekeeping, and launching a digital asset custody business as an example. Apollo, a $600 billion fund manager, natively launching LP interest in their digital assets fund on blockchain. So we've really seen a progression of institutional adoption well beyond proofs of concept and fringe use cases. And for me, that's a really important trend, because as we're seeing a range of financial assets come onto chain successfully by leading players, and that forges the path for true adoption in mainstream financial services.
Yeah, I mean, during Davos, during the World Economic Forum, we heard a lot of big bank CEOs say that they're skeptical about crypto. Maybe they see it as a grift, but blockchain technology itself, they're very interested in, and they have patents across the board for it. How has the education level or the understanding of how blockchain technology grown amongst these big players? Do they understand to separate it from crypto itself and look at blockchain and say, this is how we can implement it for our business?
Absolutely. And Jordan, all the headlines really are a lot around crypto token trading, right? But that's just sort of one part of the blockchain ecosystem, and the enduring chapter, the transformational chapter, the chapter that will change how financial services works, is adopting blockchain for real world financial assets. This means issuing mortgages on chain, issuing home equity lines of credit, private funds, receivables assets, structured products. Just think of it as the new digital factory of finance. And all of the large banks have large digital asset teams, because they know that this decentralized way of executing finance, it's the new assembly line of finance, will bring material business value to them and their customers. It will allow them to confirm things instantaneously, allow real-time trading of assets that you could never have before, and real-time settlement, more importantly. It will strip away a lot of the cost of financial services today, allowing more people to access as well.
Yeah. I don't think we can have this conversation without getting away from some of the scandals that have happened. I mean, you have FTX last year, and now there's concern around Silvergate, obviously. But how have you addressed some of the concern that maybe these financial institutions that you're working with have shown, or have they been particularly receptive to blockchain technology despite what's happening with crypto tokens, as you differentiated earlier?
Yeah, I think you have to walk before you run in blockchain. This is a totally new way of doing finance. This is decentralized. It means that computers help confirm a transaction took place, rather than two institutions saying, yes, this thing happened. And so it requires a lot of education, and it requires a lot of learning and knowledge, back to your earlier question. And I think, crypto token trading has really been about volatility in asset prices. And these assets are distinct from a real world financial asset on chain, right? A mortgage where there's a home backing it, a private fund that has real investments in underlying companies with operating income. In receivables, if you put a receivable on chain, the company has agreed to buy goods. Walmart has agreed to buy, $100 million of goods from a supplier. So you can touch and feel real world assets on chain. And I think we need to mature capabilities on blockchain. We're still early days, and that's why we're so excited about our grant program. We think it's the largest grant for regulated financial services, and that will allow people to develop KYC and AML on chain, security solutions on chain. How do you perfect assets? Meaning, if you buy them on chain, how do you ensure that those assets that you bought are ring fenced from other claims that people might have in the case of bankruptcy of an issuer? So we have there's been a lot of exciting innovation to put financial assets on chain, but a lot more needs to be done. And this is crowdsourcing the future of the finance for the first time, right? It doesn't rely on, a handful of institutions creating the future. The grant program enables developers from all walks of life around the world who have an idea and want to make that digital asset lifecycle work better for financial services. So we're really excited about catalyzing innovation in an open innovation context for the first time.
Yeah, you mentioned that grant program. It's $50 million targeted at developers. Can you explain the types of development that you're looking for, or that the projects that are getting the most interest right now?
And we've seen great inbound interest already, which we're really excited about. These are privacy solutions, right? We're a proudly public chain with permissions in terms of changing the code, et cetera. But, people don't want transactions broadcast to the world, right? We love the transparency of blockchain. So privacy solutions, security solutions, AML, KYC, perfection of assets, new use cases. So, and the idea is to encourage a wide range of diversity of thought as well. This is how open innovation really catalyzes human ingenuity, which we're really excited about. So we're excited about the initial inbounds and looking forward to continuing support of innovation of this digital asset lifecycle.
You're working very closely with developers through this grant program and through some of the other initiatives that you have. Can you talk about what sentiment looks like for developers right now? Has there been any loss in momentum or optimism given everything that's been going on in recent weeks? I feel like it's a fire hose being, aimed right at us with all of the news and all of the negative headlines that have come through.
Absolutely. I think a few things. One, we're part of the Cosmos ecosystem, which has continued to grow in terms of developer support and interest. And for those of your listeners that are less aware, Cosmos is the internet of blockchains. It allows people to stand up a blockchain purpose-built for their use case, and Provenance is purpose-built for regulated and institutional finance. It also, Cosmos has embedded connectivity with other chains, right? There's an embedded way for one chain to talk to another chain in Cosmos ecosystem, which again opens up some exciting interoperability opportunities. And so we think that, again, the beauty of institutional adoption of blockchain, it's a double-edged sword. It doesn't move fast, right? This is step by step, but it's the enduring and transformational chapter. So I think the headlines, again, are in another planet of crypto token and trading. This is real-world assets. So I can't wait until CNBC can start publishing a real-world asset sort of barometer that really reflects use cases going onto chain. So I'm excited about that day, Jordan.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.